Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced and then broke out to a new all-time high. NQ has been leading the markets to the upside, and heading into the open, the buy side remains in firm control. Now we have pre-market support at 14.5 to 15.5. This is very aggressive trade location, and we're using it more as a reference area in the sense that if the market is holding above 14.5 to 15.5, we know that it is balancing for another move higher. And if we get a break below 14.5 to 15.5, then we're probably going to go down and fill the gap and test the 0975 to 1175 initial support zone. And that's an area where the buyers can still defend and can still be active. So that's a potential for a long setup. On the upside, we have the overnight high at 2118, and beyond that, the market would be pushing to new all-time highs. So there is no hard resistance. Given the recent ranges and volatility, there is potential to test 2124 to 2126, and that's an area where we could see some rotation and some exhaustion in that zone, and the market can pull back off that area. But we just have to keep in mind that that is not hard resistance. It's really just based on this range expansion and range exhaustion idea. So the market doesn't necessarily have to stop at 24 to 26 on the dot, but that is an area where we would be getting overextended. Now, given that NQ has been leading the market higher and Apple earnings are due after the close today, that does limit the upside potential we have here. But the buy side still remains in control, so we still want to focus more on the long side and be careful and cautious on any short setups. So any pullback to 0975 to 1175 can be a potential long. In the event of a break below 0975, we have the overnight low at 2108, and then the bottom of the current developing balance area at 03.5 to 06, which would be very good trade location to enter long, expecting a move back up towards the 2111 to 2112 area and potentially back up to 14.5 to 15.5 and beyond. So 03.5 to 06 is a very ideal location for buyers to step in, and it's also a very important zone for buyers to defend on the downside. I'm not anticipating a pullback all the way down to the bottom of the range at 03.5 to 06, but it's just something to be prepared for in the event that we start seeing some more profit taking or some more momentum on the downside. So the main idea is that we are still going to be active on long setups, buying pullbacks into support, given the Apple earnings and the limited range potential from here, possibly. I think it makes sense to be conservative on the long side. We can still take aggressive longs, but if you're taking any aggressive longs from higher prices, it makes sense to play more defense and be careful with that position because the market may just balance and kind of consolidate up here. We don't necessarily have to put in a trending type move. Or if we continue holding above 15.5, we can get a breakout, but it's questionable, the extent of that breakout. So above 2118, there's potential to get to 24, but by then the market would be quite exhausted. So if you're not getting good location on the long side, then there's probably not going to be enough risk reward to justify the trade, and it's actually still better to stay put and not take a trade rather than get involved at a very aggressive price where you're not really going to have the holding power to see that move through anyway, and you might be playing a bit too much defense. So look for objective trade setups, wait for a pullback if needed. If the market is bouncing and now, in real time, you've identified a lot of sideways movement for, 90 minutes to 2 hours, and we're breaking out of that, and there's enough momentum and, strong internals, strong underlying strength in the broader market, then perhaps, that can be taken as a real-time setup. And as long as momentum's in your favor, you can at least get some follow through. But aside from that, if there's no momentum and there's not much happening in the market, it's not going to make sense to get involved at too high of a price. It's still better to wait and get more conservative location, some better odds, better risk reward. And if that means no trade, then that's okay. There's not really much going on the econ calendar. The volume is still running decent, but it has been declining over the last few hours. So we're going to keep an eye on that to see if volume starts drying up after the open, or if it actually consistently remains above average. And if it remains above average, then there is more range potential on the day. And if it starts dying out, then again it's just going to call for being more cautious because the reward potential is not going to be there to justify any aggressive trades. So right now, those are really the main ideas heading into the open. Again, above 14.5, 15.5, the buyers are in firm control, but even a pullback doesn't mean that they're losing control. It would simply be balancing in a range, and buyers can be active on any pullbacks into support. Those are the main thoughts. Let's see if the buy side can really maintain that firm control heading into the open, and we'll take it from there.